कौन जे चार्ज होगा जी इसका चार्ज होगा फुल गनीम पेन जी तुम्हें ठंडा जो पेन ठंडे ले पेन जी हाँ रात को फंस कैसे हाफ करा दो सुबह क्लास है 5:30 बजे रख लिया 5 बजे क्या कि उन्होंने रख लिया हाँ अब मैं यो है बार बस बार जाको बार सेटिंग
entries for the following table will be sufficient to give the amount. So name of account should have name of account should have. So what you do basically you start with your own. You see the question and answer yourself. Then you can compare with the answers given to the student. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes up. So credit what is given away. So it is bank. So money is given. So bank. Paid rent. So rent is an expense, right? So rent is an expense of interest. So postage and stationery paid. Again, money is going out of that. So postage and stationery they are expense. So debit. Postage and stationery. So here, why is telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or so money will go out from it. So heating and lighting bill paid from the bank account by standing order. So heating and lighting, heating and lighting, heating and lighting. Paid wages by check. So what is happening? Wages. When because money is going rent received directly into the bank account. So what is happening here? Money is being received. So bank account will be because money because rent can be paid. See here rent is paid. So it is rent is received. So or we can write rent expense account or rental income account. So, so rent received also you can write or rent paid account also you can write. But we have to specify because paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept. It says that we have to disclose everything in detail. So where bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received. Again, interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So loan received from a friend and B. So what is happening? We are receiving loan from a friend. So all the transactions are assumed are through bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So create the giver, create the account that gives. So it is the Lee who is giving. So Lee account, bank account. So money is coming in bank, and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When Lee pay the loan, Lee will receive. So Lee account debit because debit the amount that receives. So B is specific B here, which account will be debited. So then purchase is paid by debit card. So whether it is debit card or a check or whatever, always it is money will go from bank. So you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is the revenue. Sales is the revenue. Sales is the credit. So credit all incomes in the revenue. Return the goods to supplier and rank the depot. So we are returning the goods to supplier. So supplier is receiving. So you will be and money will go from bank because money is given away to bank. So refunded money to customer by check. So see return goods to supplier and rank the return goods to supplier is what is happening. You are giving away the goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver, debit no. Yes, but return goods to supplier and rank the refund. Rank the refund. We are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be and we are returning goods to supplier. Return goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? Purchase returns, not supply. It is not. It is not. It is purchase returns. Purchase. So refund money to customer by check for goods return. So it is this is sales. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales, sales return, and it will credit bank because money will go out. So carriage inward check whether it is carriage inward or carriage out. You will always go from so carriage. We have to specify whether it is carriage inward or not. Carriage. So carriage outwards, carriage outwards also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from that. So yeah, refunded goods to supplier and branded goods. So we have received the money back. And purchase returns. Purchase returns are the opposite of purchase. Purchases are debit, right? So purchase returns are always credit. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we discuss practice questions from cash transactions. main what for resale and paid for the main what for resale and paid which entries in our resource. So then when you are selling, main what goods, what you buy, you pay carriage costs. Trader takes money from the business bank account from hospital, which entries in all these. So so it cannot be received. So obviously this cannot be there. So these are practice questions. David Hopkins. So what you can do is just I will next problem. So below are the financial transactions. Major accounts and total transactions. They are the purchase machine. Paid carriage. What you can do is you can try your this question. And suppose you have any money or if you are the description in the comment section. So this is David Hopkins' latest. So, so below financial transactions from Max Business, personal transactions to present. All goods are bought and sold. Yes, all goods are bought and sold on. So basically, so no bank account is involved here. So other than other than cash, I mean cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have upon one part, the other part would have been easy. But here, it looks somewhat it is somewhat complicated. So, but it's easy if you understand the main concept. What is the main concept? So, basically, we need to know the personal account, the personal account. So, whether this account is receiving or giving. So, we need to know this. So, purchase goods from Tina that cost 2,000. So, when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives.
So what you can do is you can try working on this question on your own. So then you can compare with the answer here. So first, let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from you. So lim account. Purchase account is already there. So lim account. Sold purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 legend codes. Basically we need to prepare 8 legend codes. So let us proceed. So let us start with purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, right? Always the thing. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st. So purchases. So purchases amount debited with 2000. This is how. This is what it means. So a lot of students, what they get confused, So they write something here, so the thing that if they have debited, no, it is not like that. Purchase amount debited means purchase amount is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So your purchase from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit. This side is always credit. Always date. You have to write always date. Always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. This is what. So a lot of students they get confused. Like so Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit debit and debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like one should be debited, the other account will be credited. So this is very important. So next, coming to the next, sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Wait. October 2nd. This is always debit. This is always debit. Always 300. See, sales is a revenue. Sales is always created. Wait on incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in this. So Ali receives. So that is why we have to debit. So debit account that gives. So this is the main thing we should understand. So very important. Very important. So a lot of students they get confused with personal accounts. Rest of the account they do easily. So nominal accounts expenses they write off as an expense. The income account they write off. Revenue account they also write. Assets account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what Max is doing. What Max is doing, whether Max is giving or Max is receiving or something. Actually, you have to see what Tina, first position is in Tina. So Tina gives, Ali receives. So this is what is very, very important. Now it has been clear to you. So now it is everything is easy. So then the account the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost. So now we will what date? On 4th October. So October 4, Tina account is debited with 1. So, but why are we debiting Tina? Because we have returned goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. $dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? Trade. purchase returns to with the debit to Tina. This is how you have to read and you have to understand accounts. Very important, so that the logical flow of concepts is very clear. Okay, so very clear. Logical flow of concepts is very clear. Now next, purchase goods from limb that cost 24. So limb is another person. So again, what is the limb doing? When you purchase from limb, obviously limb gives. When you purchase from limb gives. So that's why we have to credit limb. We have to credit limb. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there. What date? Date is very important. 8. From limb. So we have to. So purchase account is debited with limb. Purchase account is debited with into limb, and limb account will be credited. What is limb account? We have to prepare limb. So October. So why are we crediting limb? Because we purchased from. Understood. This is how we have to understand concepts. Very clear, very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to owner for 1100. Sold goods to owner. So when we sell, obviously owner will receive. So the owner is the receiver. Account owner receives. Owner receives. So owner receives. So owner account will be debited. Debit the account that receives, right? So owner account will be debited and sales account will be credited. Sales account is already there, so we have to prepare owner account and we have to write in sales. So owner account and sales. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold in sales. Sales. Owner account is debited with sales 1100. So now owner account is debited. Sales account is already there. So a sales account we have to write now. We have to write it in sales. Owner account. October 8th. Owner account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina plus Tina. TB plus Tina. Purchase returns Tina. Why we have limited purchase returns? So next, all goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had told him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit the giver is the giver of the goods. So after that, why are we crediting? Because of sales returns. So now sales returns. One more amount sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a credit. So here the amount will be here and the and it is a 11. And what is the amount? Again 300. Sales returns 300. So there's no so they have written everything. So sales returns around 300. We have debit. Sales return account will be debited with lease account 300. So this is how it is. Okay. So next, this is activity 2. So now what you can do, you can try working out activity 2.2. So below all the financial transaction for Penn's business, most the transactions to the ledger, all goods are bought and sold on credit. Bought goods floating that cost 5,000 less trade discount of 15%. So sold goods to leave for 1,000. So the return goods costing 500 less discount to leave. So purchase from May that cost 4,800 discount. Before trade discount of 20%. Paid the normal load, paid week for this quarter, 15, received full payment from you. So what you can do, you can try working out this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Pen, whatever. So business is post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, pinch account, pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to tinge. So again you are returning the goods. This is return goods. So you are returning to tinge. So who is tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is 45. So 45. 515 is 45 means 15% of this. 45, so 4 and then 65. 65 or 55? 55. Correct, no? 550 is 45, so 55. 55. Okay. So purchase goods from B. So again purchase account is already there. So B. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is so 48. 3,840. So 3,840. So you have to record it at 3,800. So then, so paid all money owed. So whatever money you are owed, you have to pay to, you are paid to Ting. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? One, one, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first you bought one tinge that cost 5,000. So first you prepare purchases account. Purchases account. purchases account. So this side is always debit, this side is always credit. So purchases account will be debited with 4250, 4250, because purchases is an expense. So expense account is always debited 4250. So date, always you write the dollars. Amount you have to always write, don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see, purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. Purchase in Tinge gives. So Tinge account will be credited. Why? Because we have purchased from him. Okay, so this is how we have it. Next, the entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next, sold goods to leave for 1000. Sold goods to leave, sales and sales account. Sales account. So how much is sales sold goods to leave for 1000? And November 5th. November 5th. November 5th. 1000. Credit to sales, because sales is an income. So credit all incomes and gains. So 5th. So leave, because leave is the receiver of goods. So this side is always debit. This side is always credit. By default, this is always debit. This side is always debit. This side is always credit. By default, so dollar November 5th. So 1000. Why are we debiting the leave? Because we have sold in sales. So we have sold in. So debit, credit. Sales account will be credited because it's an income. Leave account will be debited because you are the receiver of the goods. Okay, then comes next. Next, return goods costing 500 less discount to 10. So we are returning the goods worth 500, but after discount it is 455. So return the goods means these are purchase returns. Tinge account is already there. Purchase returns, Tinge. So purchase returns. So purchase returns account. Purchase returns. So why, to whom we have returned? We have returned to Tinge. We have returned to Tinge.
to debit tinge. Now we have credited purchase returns. Now we have to debit tinge. We have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit tinge. 4 and always read the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 Number 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from way. Okay. So that's why we have to write way here. So we have purchased from way. So purchases account will be debited. Now we have to write it to V. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So number 840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from V. So receive. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. So we have to pay to pinch and V. Pinch. How much we have to pay to pinch? Obviously the balance. When we have paid on November 20. November 20. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3795. So we have to pay to another person. We have to pay to B. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3840. So obviously we have to pay him 3840, and it is on November 20th. November 20th. We have to pay him. So 3840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3840. So next, what is there? Next, received full payment from V.
received full payment from B. So we have received full payment from B. So let us see how much we have to receive from B. So we have to receive 1000 from B. So we have received what date we have received? We have received on November 25th. November 25th, we have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. Bank. So November 25. So from leave rate, oh, that's all. So we have finished. What else is required? Below are the financial transactions for Penn's business, plus the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, we have paid everything, so that is no amount left over. Sales account is credited. So then B account is debited and credited because we have sold and we have received also. Next, purchase returns 455. B account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be credited. Sale account will be credited, Dia account will be debited. Why? Because sale is an income, credit or income and means, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver. Receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Jones Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account, that is what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchase goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases, and we have taken Allen is the giver of the goods, and so discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are called purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? we have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out bank account. Money will go out. So we will receive joint limited goods. Receive full payment from DER less cash discount. So we have received payment from DER. Receive full payment from DER. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DER because she is the giver of money. So T Allen for goods bought less cash discount. So here we have to pay Allen. Allen is the receiver of money, so Allen account will be debited. So we are paying. So money will go from bank and discount received is again discount received. So the amount we are not going to pay because of discount that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is the this is activity 4.3 David Hopkins the latest book. So, okay. Dear friends, welcome back to Shasha's virtual classroom. This is practice questions from David Hopkins lesson number 2 credit transactions. So which of the following transactions before attempting this before having a look at these answers you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid. This money is credited. So bank account is credited because payment by a customer. Sorry, see this is payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier is something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's, and it is Joe's books means it is purchase. In Maria's books it's a sale, but in those books it's a purchase. So be careful. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170, Maria account 170. This is the right answer. Okay. So next. So next. Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay. Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay. And offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded. This will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold. Sales entry will be recorded. Sales entry will be recorded. Okay. So it will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry. Not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions for the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the where below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books or books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the trade name of the trader. So Junior had the following trade purchases and purchase returns. Trade purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 trade discount. Okay. So purchase goods from Cora 400. So then purchase goods from Frame 400. So then purchase goods from Frame 14,000. Allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000 and discount cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you have sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Craig. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase, journal, they record all purchases, immediate purchases, and purchase returns journal, purchase returns journal, they record all purchase returns, and cash book, to record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So three books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, three books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase return journal, purchase returns account. So then Cora account, Dream account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase return journal. Okay. So let us first prepare purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. date. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So you know it should be recorded at 8,000. See, remember always, rate discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem. That is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is next. Again, we have purchased goods from Cora for 16,000. So it will discount of 20%. Again from Cora. What date? It is on 5th November. It is on 5th November. Cora. So how much is the amount? $12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchasing. Now we need to record, okay, purchase returns general. Purchase returns. So what is the date again here? You would write the date. You would write so what date? Return dates on 4th November. So November 4th. So what is the amount? Date. So from we have written Cora. And they received credit note. See, remember one thing. So when we are writing the purchase journal, we recording individual. Okay, so we are recording individual entries. Very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at that time you will need this knowledge. So at that time you will need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to
keep in mind when we are doing control accounts, lesson of control accounts. So these are all interrelated. Okay. So this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. So it is in dollars. This is also in dollars. So here, next first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Prem. So we have paid to Cora and Prem. So we have paid to Cora and Prem. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, returned. Returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320. What is 320? So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods for 320. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of cash discount will be different. So in this case, here also it's 5% cash discount, here also it's 5% cash discount. So there is no variance. and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay? Frame. So the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is 280. 14,000. Frame 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,720. So this is the amount you have paid to pay. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November. So you have made the payment of November 9th. So this is the cash. This is how you have to receive record. Discount column 1024, frame 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10. So what is the date? What is the amount of purchases? Total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. I mean purchase journal we have prepared. So 34,800. So we have to prepare 30. See, this logistics is very important. So when you're doing control accounts at this time, you'll come to know. So you may have to reconcile. So I mean, it's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we will enter it in purchases account. We record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns journal. So what is it? 320. So now we have to prepare other accounts, Cora account. So we have purchased from Cora. So Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So you can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. first. So on first it is 8,000. On fifth it is 12,800. 12,800. So this is purchases. Purchase. This is purchase. Remember, you are writing purchase here, not purchasing. Okay. Purchase. Purchase 8,000. Purchase 12,800. So here this side. So it will be. So this is number one. Because purchase journal, it is a journal. Okay. So purchase journal. So this is our core ledger account. So now next, what is it? So what date you have written? You have written on 4th November. So how much? 320. Yes, 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases 14,000. Okay. So now come to discount received. So again, discount received is again. So discount received is again. So it will be created. So individually you have to write. Or you can write the total. So discount received is 1304, 13,004. So we have to record that discount received 13,004. So number 10. So cash book. So that's all. So 1,304, not 13,004, 1,304. So that's also discount received. So what else is there? So I have told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and a book journal ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we have already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important. Prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in Lee's cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the a problem on your own so that your understanding is clear. So always try to work out on your own and then compare the answers so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format or particular, what do you say, in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between, so there should be one line. So again, similarly, this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount receipt, one column, cash, one column, bank, one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st, April 1st. Okay, so one more thing. So whatever we receive, we have right here. So all that is received, we have right here, and whatever we pay, we have right here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in and it is cash. And it is cash. The receipt, sorry, this is received. So it's a credit, no, it is received. So this is discount allowed. Allowed discount. So allowed discount. So remember this is allowed. Okay, so this side, because when we pay, at the time we receive discount, no, we receive, so it's a credit. So but when we receive, at that time we allow discount, so it's a loss. So we write here. So cash account, sales 1000, sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. So this is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. No, see, they are not writing whether it is receipt or paid. So here they are writing discount received, they are written. Okay, so discount allowed. So here if they are not written whether it is received. So this is just for you to remember. So just for you, so that you understand, it is easy for you. Okay, so don't write this. So don't write. This is for you, just you, for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out. Electricity. How much? 100. Cash. Credit what goes out. Cash has gone out. credit what goes out. So next, so we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third 800. On third sales 800. We are receiving, when we sell we receive, no? So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking it confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay. So this is the easy way. Bank cash. Banked cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So banked cash means we are depositing cash into bank. Cash is going out. Cash is going out and money is coming in bank. Banked cash. So money is coming in bank. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Banked cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account, that's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay, so a lot of students, they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple, that's all. Okay, so then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So withdrew 900 from bank for cash float. So we are taking out money from bank. Okay, withdrew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So withdrew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank bank, and coming in cash. Cash, cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, cash account will be debited, and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also, so they get confused. Understand this, this is very very important. Withdrew 900 from bank for cash float. Cash float means to keep in office, to keep in office for cash expenses. So that is the meaning, okay, to keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What date? 6th. On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. This is payment, right? So money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So again, this is where you have, here you have written in cash column, so here you have to write bank. So this is in cash column, in cash column, but yeah, here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on one account and bank on the one another account, same. So very careful, okay. So lot of students commit mistake here, so this is very important. So this is very very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in AS level. So because it's very important, often asked, okay. So very very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we are total here. So we total here. So whatever balance is there, balance carry down. So this side here cash 100 minus 900 is 500. So we write here 500. So here 1800, 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1520. 2700 minus 1520. Okay, so this will be 1000, 1800, 2000, so it will be 1180. So here it will be 1180. So now the total on this side, total this side, total this side, total this side, total this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. So crystal clear. Okay. So this is how it is. So 118. If you add all this should be 10,700. So in other words, when you are balancing, so both the sides should be same. Okay, so here balance got down. So balance got down. Whatever is carried down here, it will be brought down here. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can, before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So we will be glad to help you. Okay. So prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 40,000. This is very simple journal entry here. So what is there in this? So first one, so we will just write here. So first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale or use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books, or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So you will debit motor vehicle and credit Paul. Why? Because debit, what comes in debit, asset is coming in. So Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle business. Okay. Next, purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So, okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next. A new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit. Equipment. Debit. Furniture. Debit. Stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B. Jones, a supplier, has been posted to C. Jones' account in error. So what is the right entry? Received from B. Jones. So we have received credit note. So we have to debit B. Jones. A supplier. Okay. So we have to debit B. Jones. So what is the right entry? We have to debit B. Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? what is the right entry, then what is the rectification entry. So what is the wrong entry? Wrong entry is received from B Jones. Okay, received from B Jones. So we have to credit B Jones. Credit note. We have to credit B Jones or debit B Jones. We have received, no. So we have received means we have to debit B Jones. We have to debit B Jones. Debit B Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B Jones. You have received from B Jones. So you have received a credit note. So credit note means you are getting credit, means you have to debit B Jones. Understood? You are getting credit. So you have to give, you have to debit B Jones. So what is the right entry? You have to debit B Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B Jones, you have debited C Jones. You have debited C Jones. So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit B Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C Jones. So when you pass this entry will be offset. We already debited the C Jones as a wrong entry. So when we credit C Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B Jones. So this is actually transfer entry, we can say. Okay. Transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principle. Second one is also error of principle. So this one is opening journal entry, and this is again error of principle. Instead of debiting one person, we have debited some other person. So this is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry. Okay. So books of prime entry practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and we can compare, we can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of, so 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount, 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because purchases is an expense. So Jaya is creditor. So supplier. So it should be credited. So we have not done this. So it is under added. So this is the correct answer. So simple it is. So if you understood the concept, it's very simple. Otherwise, it's complicated. So don't try to mess up. Take some time to understand the question. So then the concept is very clear. Then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchased, return goods, purchased. So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely discuss this question once you let me know. Okay. So till then, have a good day. Good night.
Dear friends, welcome to Shasha's Virtual Classroom. Today we will be discussing activity 4.1, a comprehensive problem on posting the lecture, preparing cash book, and balancing the accounts. Okay. So Jana's business has opening balances and 1st October dollar term 1,000 cash and 2,500 in the bank account. There are no balances on any other accounts. Okay, there are no balances on any other. She has the following transactions for the first week of October 1st. Jana put her own money into the business bank account, 8,000. Bought goods for resale on credit from David. Paid rent by debit card 1,000. Sales on credit to Yash. Cash sales 700. Paid cash into bank account 500. Paid their money owed by check after deducting a 5% cash discount. Paid stationery by cash 30 bucks. So prepare the necessary accounts and cash book to record the transactions. Balance the accounts at 7th October and bring down the balances. So first let us make out list of ledger accounts. Okay. So first let us prepare a list of ledger accounts. So Jana put her cash account. So obviously we will balance cash account. Bank account or cash book you can say. So this will come in cash. Okay. So this is so even discount will come in this. But discount account also we have to prepare. Okay, then put our own money into the business bank account capital. Bought goods for resale on credit from their purchases and paid. Paid rent by debit card, rent amount. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account contrast so that we go to cash details. Paid their money owed paycheck after deducting 5% cash discount. So you have paid, so you have received cash. So cash discount received. Put in discount. Received. Account. So they went bank that is already paid for stationery by cash. Stationery. So how many accounts we need to prepare? 1, 2, 3, 4, 5, 6, 7, 8, and 1 cash book. So cash book, this is ledger account as well as account line entry. So this is. So first we prepare cash and bank account. So then we prepare all these accounts. Simultaneously we prepare everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this, and you can get a clear picture of what has been done till now. So let us start. First October cash 1,000, 2,500. Bank 2,500. First October. October 1. Cash. 1,000 cash. 2,500. 1,000 cash. 2,500 bank. So it is balance product. Balance. Jana put her own money into the business bank account. Own money. Okay, own money is nothing but capital. Is nothing but capital. So Jana has put her own money into the bank account. So money is coming in bank. So money is coming in bank. So and what date this is first? It is on first itself. So money is coming in bank, debit bank account, and who is the given? Who is giving it? So it is capital. Here, October 1. 8,000. So it is bank by bank. They received through bank. Next, bought goods for resale or credit from the purchases. Purchases 5,000. So what date? Date is on 2nd. debit, they account credit. They account credit. Okay. So again this you have to write bill. Again this you have to write purchases. So the entries complete. Next, paid rent by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as a bank payments. Rent 1,000. Debit card, bank, rent and bank 1,000. For debit is second. Money has gone out from bank. Okay, so rent account, money has gone out from bank. So it will come here. So next, so we have to record it. The opposite side is rent. So rent account. So 1,000. So October. Second. So through bank we have paid. So rent account is an expense. Nominal amount always debit. Next. Sales on credit to Yash. Sales and Yash. Sales on credit to Yash. Sales. What date? 4th. Sales on credit to Yash. Sales on credit to Yash. Total amount 3,000. Sales is always created. So Yash. So opposite side. Yash account will be debited. Why are we debiting him? Because we have sold the goods to him. Because Yash is the receiver, account that receives. Yash account receives. So debit the account that receives. Next. So cash sales 7. So what is happening? Sales is happening and cash is coming. What date? 4th. Cash sales 7. Cash sales. Cash sales means money will come in cash account. Sales. So we are receiving money in cash through sales. So sales account will be debited on the opposite side. Sales. So cash. 700. What date? 4th. Paid cash into bank account. Paid cash into bank account. What date? 5th. Paid cash into bank. So cash into bank. Cash is coming in bank. Paid cash into bank. So money is coming in bank. What date? 5th. Cash is paid cash into bank means money is coming in bank, but whole go to cash. So here, so it is cash payment and bank receipt. So October 5th. Same date, same line. So against this, so money is going out from cash and coming in bank. So against this, you have to write bank. So against this, you have to write cash. Next. Paid the money owed by check after deducting 5% cash discount. So whatever money after deducting a discount of 5% on 6th we have to pay. So how much we have paid there? 250. Discount received is 250 and money is going from bank 4,007. So to whom we have paid? We have paid to David. So today when we have paid on October 6th. How we have paid? We have paid bank 4,750 and discount received 250. And this we have to transfer to discount received account. Yeah, it is discount received. Yeah. What date? Only amount on 6th. Over 6th. Okay. So we are done here. So next. Paid for stationery by cash. 30. Paid for stationery by cash. 30. So what? It is on 6th. Paid for stationery by cash. On 6th. On 6th. We have paid stationery by cash. So money will go out. 230. Stationery. Stationery. Money will go out. So what you have to do? You are writing stationery here. October 6th. So through cash, we have paid stationery. Cash stationery account is always debit, and we have to credit cash. So because cash is going out, debit stationery with 30, cash. Now we have to balance. How do we balance? So what is the most important account here is the cash. So basically what you have to do, you add all this. So 2500 plus 8000 plus 500 is 9.5 plus 10,000, and this side it is 1,000 for 4,750. It is 5,750. 10,000 minus 5,750. So what you have to do? You write down in pencil here. Write down what you do. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5,750. Here you will get 10,000. So 10,000 minus 5,750 we have to subtract one from the other. So 10,000 minus 5,750 is 10,000 minus 5,750. So what you have to do? 4,250 you have to write here. 4,250 you have to write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried out. So balance carried out. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170. 1,170. So that the total on both the sides become equal. 1,700. So this side is also same. This is how balancing is done. Okay. So now we remember we have to do balancing only for capital accounts and real accounts because they will be carried forward for the next accounting period. So cash capital account is 8,000. Balance carried down is so this will be carried down to balance carried down. So will become by balance brought down. By balance brought down. So only the dates will change. So here it will be October 7th. Here it will be October 8th. October 7th. So balance total. So then. So purchases amount 5,000. So there is no need to balance. This is 5,000 itself. You have to just this will directly go to the trial balance. So they were here also 5,000. Here also 5,000. So there is no question of balancing here because the total on both the sides are same. Then this will straight away go to trial balance. You have to write this as it is. Sales 3,700. This will go to sales account directly to trial balance. So if you want, you can just write the total. So this will go to trial balance. Yes, sure. So balance carried on. Balance carried on is 3,000. So this will be brought down again. Balance brought down. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is will be straight away go to trial balance. So this is the this is what else we need to do is to balance the accounts at first and bring down the balances. Okay. This is how we have to do this balancing. Yes. So okay. So we'll catch up in the next class. Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing the accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with us. Which of the following account is most likely to have a credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following account at the end of September. So this is a nominal account, discount allowed. So discount allowed. So balance. So we have added 234. So that is balance. See, balance is 334. So it will be carried on. But it will be carried forward straight away. It can be straight away carried forward to trial balance. So we have to just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 130, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side to make it 1340. So it is 740. So 700. So if you put 700 here, so it will be balance carried on. Balance carried on. So 700. So the both the sides, the always total should match. So 1340. So if we get 700 here, so this will match. So it will become 700. So it will be 1340. Next, A&B Limited. A&B Limited account sales. So total sales. So we have sold to A&B Limited and we have not received any money from them. So next. So 700 plus 450 is 1150. So 1150. So it will be balance. So 1150 will be the balance carried on. So both the sides it should be 1150, 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and so he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balancing account. No problem. So balance capital, same amount. So that both the sides is the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be here. So 800 plus 100 is 900. 100. This side it is 220, 265. So 900 minus 265. 630. So balance carried out is 639. So the total, if you put balance, so to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is here. Since credit balance is here, see 5,300 and this side it is 3,500. So since it is credit balance is here, so it will be here this side balance carried out will be this side. So 5,300 minus 3,500. So 1,800. So balance carried out will be 1,800. So this side total it is 5,300. So this side also it becomes 5,300. So explain why trade receivables account have debit balances while trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shabda's virtual class. Today we will discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own and you can cross-check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that discuss the given accounts and books of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is the part of those items which you keep getting and which you can use for your business business operation. So it is income for you. So it is generated regularly or it is the main source of your operations. So expenses the expenses which you incur like salary, rent, all those things. Okay. So rent is normally so rent is let's assume it's an expense because since they are not specified. So if you see other line item here, rent receivable. Here rent receivable is there, so this is income. So let us assume on present things So this is the rent paid or payable. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference. But normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have got some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we write right here. So trade receivables. Trade receivable is an asset. Why? Because we have pulled on credit and that person has to pay. So these are customers. So trade receivables is also known as debtors, trade debtors, receivables, goods receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you know you have to your money will be lost. You will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending the postage to courier and all those things and all. So then next, postage is not bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payables. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors. They include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed in discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations is considered as other income. Okay. So rent receivable also can be considered as other income. So all these are other income. So what are revenue, main revenue? So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts, so we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So and we can okay. So activity 5.2. In which ledger would you expect the following accounts? The first one is completed to you. So in which ledger? Okay. So which ledger? So what are the different ledgers? So there is general ledger. So there is customers ledger. There is suppliers ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers, division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature alone or recorded there, and cash book for the bank and cash accounts. We use cash book. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger So other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay. So capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is buying. So customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whatever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. We have to ask ourselves whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger itself. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book you can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So price. Here once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are accounts. Receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and sales are related. So purchase ledger. So even though it is purchase ledger, is for the accounts of suppliers. It is not for the account of purchasers. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded here. Other income. So other income is like interest, all those things and all expenses. Expenses again purchases. Okay, so all these things are recorded here. Private, so that is nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often in MCQs and all. So keep a note of this. So very important. Okay, so sales is general ledger. Okay, so general or nominal. It's called nominal. Nominal. So general or nominal. Why? Because it is revenue. Wages is an expense. Okay, so be careful. So this is how we have to understand the concepts. So with the concepts of see as you proceed for A levels, if the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Okay. Purchase ledger. Purchase ledger. Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of reduction. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account, okay. So expense account is it? So expense account. So goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again where do you record? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contains the accounts of suppliers from whom the government buys credit, correct? So the heating and lighting account is stored in general ledger, correct? Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Good bought on credit or recorded in the? No, it's not right. Not in sales. Not in sales. Non-current. No, non-current. So only three types of ledger are there. So only three ledgers. Okay. So when they say ledger, ledger, ledger. Okay. So then goods bought on credit are recorded in the general ledger. So then a dash is a set what used in the business for a long period, so non-current. So we have chosen this, we have chosen this. Nothing is related to sales. So just see the dash ledger contains accounts of suppliers from whom the business buys on credit. So purchase ledger. The heating and lighting account is stored in the general ledger and is an example of expense account. So goods bought on credit are recorded in the general ledger. Okay. So then dash a non-current. So this is again purchase ledger whatever. So general ledger. So a non-current asset is bought for use in the business for a long period of time. So it is non-current asset. So this is the end of activity 5.3. So very simple thing. So you will get confused. See again, the concept should be very clear. Okay. dear friends, back to Shasha's virtual class. So, classification and division of ledger. So, so let us have a look at the practice questions today. So, which account is most likely to be kept in private ledger? So, drawing is interest received, drawing is what is very private. So, obviously, drawings is very private. So, how should the cash discounts be classified? So, how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset, it is an expense. So it is income, no, it is liability, no. Discount received is a liability, no. Discount received is an income, yes. Expense, no. Asset, no. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in a particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shasha's virtual class. So today we'll be discussing activity 6.1. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things, you know. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy, a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay, so how will we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer at 31st December. As on alert 31st December. So we have to write it in a specific format. So basically, we have to write particulars or names of accounts. So here in the ledger folio, so debit, debit. So we'll have two columns, debit column, credit column. So let us start. So before starting, so property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balance by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales return exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000, so motor vehicle 18,000, office furniture 14,000, office furniture 14,000, computer 2,000, sales 40,000, computer 2,000, sales 40,000, sales return 600, purchases 6,000, returns 500, purchases 6,000, return 500, motor vehicle expenses 4,000, advertising 1,600, advertising 1,600, office expenses 1,000, office expenses 1,000, stationery 400, stationery 400, cash 200, cash 200, bank 300 credit, capital 110,000, capital 110,000, drawings 3,000, drawings 3,000. So the total is, if you add all the sides, it is 150,800, 150,800. So it will match. So this is activity 6.1. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. So let us discuss activity 6.2 today. State which of the type of errors in the following represents. A customer's invoice has been omitted from the sales journal. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically, there are 6 types of errors that occur when when debit and credit totals in the trial balance agree. They are as follows. So type of error: error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay, so omit. So omit. So omission. So omitting means leaving out the transaction. This could happen if a transaction is not entered, not at all entered. Okay? So not entered in the book of prime entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expense you incurred, we are not recorded. So that is one example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash account. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected, you have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both classed as expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you are putting some other. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have told, see, payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account, debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses when the motor vehicles are non-current assets. Okay, so it is wrong class, ignorant. So what has happened? The person doesn't know how where to record. Instead of recording fuel per vehicle, he has recorded as motor vehicle expense. So that is wrong. So ignorant means he has not followed the accounting principle. He has not followed the accounting rules. Rules are not followed. This is same class. Okay, next one. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. The purchase invoice is entered on the purchase journal as 10. So it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal of entries. Complete reversal means instead of debiting, they are credited. Instead of crediting, they are debited. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account because it is paid. See here the accounting principle. So whatever we have learned in first lesson. So cash transactions and credit transactions you have to apply here. So if you are not understood there, here also you are not you will not understand. So be careful. Okay, so your concept should be, it should be logical flow of concepts. It should be logical flow of concepts. So if you understand, if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to scam is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Instead of debiting, you have credited. Instead of crediting, you have debited. So compensating errors. So what happens sometimes? Errors will offset. So and then at off. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So compensate. They compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000, and the same amount the sales journal is underadded to low by 200. The debit balance on the customer's account and the credit balance on sales account will both be underadded by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200, and the other place they have not written. So because of that, they cancel out, and the net effect is nil. So the debit will be equal to credit. So ultimately, what they trying, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out, and the error is not at all evident. Okay, error is not disclosed. Error not disclosed. In trial balance, they offset each other. One error offsets another. One error offsets another. So two or more errors that cancel each other. Okay. So this is what you need to know. So first you need to understand this. Then only you should do that problem. So now having understood that, now we will discuss it. Okay, customer's invoice has been omitted from the sales journal. Omitted. Error of omission. Simple. Purchase journal. So purchase journal, original entry. Because first as soon as we purchase, we are recording purchase journal. So original entry. Purchase of goods has been entered in the purchase journal. So it is for error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? We have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct, no? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high over on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overhead means expense has increased. So sales account, income also sales account. So income also has increased, overadded. Okay, both are over. So expense is debit, sales is credit. So what will happen in this case? This is overadded, this is also. So debit is also increased, credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high, overadded on the heating and lighting. So expense. So overadded to the heating and lighting, so expense has increased, debit. And 52 low underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has added. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principal. That's correct. So this is end of activity 6.2. So this is a very important topic. So you have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important reason. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately the end result will be zero. So never regret. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance on 31st December 2021. It does not balance. Rewrite the trial balance. Rewrite the trial balance and correct the errors. So basically, we need to rewrite the trial balance. If anything, if there is any mistake, we have to do it. So you know, all expenses, all assets and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. So they are credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before you learn this, I had this whatever. So before starting this question, so try to answer yourself and then you can have a look. So plant and machinery is a debit balance, so this is correct. Loan from David. Loan from David is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rent and rates are expenses. They are not credit. This is wrong. So 3,000 rent and rates. Don't write here. So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft. So total. General expenses debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, it is a gain, other income. So it should not come here. So bank debit balance, normally trade receivables asset, always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns, sales is always a credit, sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital, drawings will always come here. So now you read out the trial balance. You have understood the concepts. If you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So this is activity 6.3. Let's continue in the next class. Till then, have a good day.
Dear friends, welcome back. So this is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. Has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income. But so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much too much debit because you have debited. Discount received is a credit, so you have debited. So it is debited, and you are not credited to discount received. So so you have not done this. So it is too less credit. So this is correct. Next, which of the following is not a reason to prepare a trial balance? To check that the total of debit balance is equal to total of credit balances. To find to help find errors in the accounts, which is not a reason. Okay, so this is the reason, this is the reason to increase the sales of a business. That's also, it's not a reason. Okay, to prepare monthly reports for managers, so this is not a reason to increase sales. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books, so you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset, debit. So trade payables, liability, credit. Loan from Ting, liability, credit. Drawings is a debit. So balancing figure is, so capital. So basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay, so difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay. Have a good day. Till then, bye.
So rules to remember. So a business normally deals with persons, whether natural, artificial, or representative. So when we deal with any person, then they are called personal accounts. So either we receive from them, or we pay, or the business will either receive or pay or give to the other business. So the rule is debit the account that receives or debit the receiver. Debit the receiver. So some authors they write this way. So debit the account that receives or debit the receiver. Like David Hopkins and all, they use the first rule, that is debit the account that receives. They write in that way. So some other authors they write debit the receiver. Similarly, for credit items, they write credit the account that gives or credit the give. So some authors write the one way or the other. So the rule is ultimately the same. I mean, the concept is ultimately the same. Real account, debit what is being received. So in case of real account, when we receive or pay something, when business receives or pays something, so then debit what is being received or debit what comes in. So credit what is being given away or credit what goes out. So this is the rule for real accounts. So you know what is real accounts. So when we deal with cash or bank or something. So nominal account, the rule is debit all expenses and losses, credit all incomes and dues. So nominal accounts and expenses and incomes. So accounting equation. So when we are recording accounting equation from the accounting point of view, when we see from accounting equation point of view, assets normally have debit balances, liabilities and capital normally have credit balances. So remember, assets and expenses normally are debit balances. Okay, so liabilities and incomes are normally credit balances. So even if you know, it is noteworthy that capital is also a liability. So it means capital, liabilities and incomes are normally credit balances.
Hey, remember, I'm a trainer, not a tutor. I train you to pass, to succeed, to clear your exams, to get better marks, to excel in your studies, so that you understand and do better and better and better and best. The best. It's okay. I've been taking on classes. I'm aware of the difficulties faced by various students, below average, above average. I analyze and understand what they don't really understand and how the students suffer. I feel the I feel the pulse and try to understand their difficulties, making the student understand the subject and making interesting for them to learn so that they excel in their studies is my core perspective. These days, a lot of students have various difficulties. They won't understand anything in the class, doing online classes. lot of students who are taken up distance learning classes face various difficulties in understanding the core concepts. So they try to understand, but most of the teachers uh, have different methodologies to explain, and few students are unable to understand. It's a hard time for the students. Myself, not being just learned, but having understood the subject as a common sense, I'm a professional tutor, professional trainer, and educator, having on-job experience and theoretical knowledge in various subjects such as direct taxes, indirect taxes, accounting, be it financial accounting, advanced financial accounting, cost accounting, advanced cost accounting, managerial accounting, advanced managerial accounting, management accounting, advanced management accounting, financial management, operations research, quantitative techniques, business mathematics, business statistics, business economics, business studies, and various other business management subjects. I even have on-hand experience in ERP, SAP, Tally, QuickBooks, and all. So I'm in a better position to explain the real logistical issues, the logistical problems, the core concepts in a better way. So a lot of students approach me near the exams for exam-oriented crash courses and exam-oriented coaching so that they pass their exams. I have a record 100% of my students clear my exams, clear their exams with ease. 100% they succeed. So I explain them as if they are novice, ignorant novice. Even the ignorant novice understands the subject easily. So I teach them as a common sense because any subject is more a common sense than a subject. So a student should be capable of understanding the concepts so as to make their life easier. So learning becomes pleasure and enjoy. So anyone who is interested, who wants to clear their exams with ease without any difficulties, please get in touch with me. I'm available anytime for them. 24/7, I'm available for them. Thank you. Caring is caring. So please subscribe, share to my channel because spreading knowledge only increases your knowledge. For international curriculum like IGCSE, O levels, AS levels, and A levels, clear understanding of the concepts, remember, correlate, application skills is a must. Proper practice and training is very prerequisite for scoring A plus.
So, dear friends, let's continue with activity 1.2. So, this is David Hopkins' latest book. This is from David Hopkins' latest book. Yes, this is David Hopkins' latest book. So, complete the entries for the following table with information taken from the accounts of every. So, name of accounts to debit, name of accounts to credit. So, what you do basically, you start with your own. You see the question and answer yourself. Then you can compare with the answers that you understood. Okay, paid rent by check. So what is happening? Paid rent by check. Money is going out. So money is going out means credit what goes out. So credit what is given away. So it is bank. So money is giving. So bank account. So bank. So we have to write here bank. Paid rent. So rent is an expense, right? So rent is an expense. Debit all expenses and losses. Rent account. So postage and stationery paid with it. Again, money is going out of bank. So postage and stationery is an expense. So debit. Postage and stationery only. Postage. So here, why? Because money is given. Credit what goes. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or whether it is given order, so money will go out from the bank. So here it will be telephone charges. So heating and lighting bill paid from the bank account by standing order. So heating and lighting, heating and lighting. So heating and lighting expense. Lighting. What is happening? Wages. Wages account by bank. Why? Because money is going out to bank. Rent received directly into the bank account. So what is happening? Here money is being received. So bank account will be debited because money is being received. Bank account will be debited. Rent received. So rent received. So you specify because rent can be paid. See here rent is paid. So it is rent expense account or rent and income account. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. Rent paid rent is an expense. Okay, whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept. Which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received we can. Interest received. So again interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. So money is going out from bank, right? But out of bank account. So then loan received from a friend, B. So what is happening? You are receiving loan from a friend. So all the transactions are assumed they are to bank. So you write money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account. Bank account, Lee account. So money is coming in bank and Lee is the person. Lee is the account that is giving. Loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we repay, the loan Lee will receive. So Lee account will be debited because debit the account that receives. Okay. So be specific, be clear which account will be debited, which account will be credited. You have to be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go out from bank. So purchases account debit to bank. Bank account because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank the take. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is a revenue. Sales is a revenue. Sales is a credit. So credit all incomes and gains. Revenue. Return goods to supplier and bank the refund. So you are returning the goods to supplier. So supplier is receiving. So you will debit supplier. And money will go out from bank because money is given away to bank account. So refunded money to customer by check. Oh, sorry. So see, return goods to supplier and bank the refund. Return goods to supplier means what is happening? You are giving away the goods to supplier. Return goods to supplier. So you have purchased the goods and you are giving it away. So credit the receiver, debit the receiver, credit the receiver. Debit no? Yes, but return goods to supplier and bank the refund. Bank the refund. You are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be debited. Bank account will be debited. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? No, it is purchase return, not supplier. Yes, this is not relevant. It is purchase returns. Purchase returns. So refund money to customer by check for goods return. So this is sales. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales return. Sales return, and you will credit bank because money will go. So carriage inward paid by check, whether it is carriage inward or carriage outward, money always will go from bank account. So carriage inward, we have to specify whether it is carriage inward or not. Carriage inward. So carriage outward. So carriage outward is also an expense. Whether it is carriage inward or outward, it is always an expense. So money will always go from bank. So here it will be refunded goods to supplier and bank the refund. So we have received the money, bank will be debited, and purchase returns will be paid. Purchase returns are opposite of purchases. Purchases are debit, right? So purchase returns are always paid. Okay, purchase returns. So this is how it is. So this is activity 1.2. So we'll continue in the next class.
Students, welcome. So today we'll discuss practice questions from cash transactions. David Hopkins literature. So before seeing this complete video, what you can do is you can just have a look at. You can try solving this question on your own. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you'll receive when you purchase, you will not receive. When you rent receivable, obviously you receive. So it will be debited. Sales returns you don't receive. Wages you don't receive. So Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? Amir bought goods for resale and paid for the goods to be delivered. Which entries in Amir's books record the delivery cost? So money will go out. Obviously, money will go out. Wait, the bank account will be created. Money will not come. So money will go out. So then, when you're selling, Amir bought goods, bought goods. When you buy, you pay carriage goods. So see the a trader takes funding from the business bank account for personal use. Which entries record this in his books? So money from business bank account for personal use. Which entries record this in his books? So for personal use, drawings. So money will go out. So it cannot be. We receive. When we receive, you debit them. When we receive, you debit them. So obviously, this cannot be the entry. So drawings will be the correct entry. So these are practice questions. David Hopkins, latest. So what you can do is you can just have a look at the next problem. So below are the financial transactions for Mira's business. Open if necessary. Ledger accounts and post the following financial transactions to them. All transactions use the bank. Mira commenced business by paying 20,000 into her bank account. Mira the amount of following financial transactions. Purchase machinery, paid rent, bought goods, so paid carriage invoice, sold goods, paid for hailing, heating and lighting, received rent, bought more of machinery, bought more goods. So what you can do is you can try working out this question on your own. And suppose you have any doubt or if you are unable to do it, so you can leave a comment in the description in the comment section of the video. So can I will just help you work out. So I will work out the problem and so till then I will play.
Dear friends, welcome to Shasha's virtual class. So today we will discuss activity 2.1. So this is David Hopkins' latest book, the latest book. So we'll start. So below are the financial transactions for Max business. First, the transactions to the ledger accounts. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions. How to record credit transactions? This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So if you would have found one part, the other part would have been easy. But here, it looks somewhat. it is somewhat complicated. So, but it's easy if you understand the main concept here. What is the main concept? So, basically, we need to know the person, the personal account. The personal accounting. So, whether this account is receiving or giving. So, we need to know this. So, purchase goods from Tina that cost 2000. So, when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working out this question on your own. So then you can compare with the answer here. So first let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account. Because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Omar. Omar account. Because sales account is already there. Omar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali sold. Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, write always the heading. So which account you are preparing. So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember. So that the logistics will be clear. So how much, what is the worth of goods you have purchased, and it is on October 1st, 2000. October 1st, 2000. So purchases. So purchases account debited with 2000. This is what it means. So a lot of students, what they get confused. So they write something here, no? So the thing, if they have debited, then no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited. and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always date. You have to write always date, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is what. So a lot of students they get confused again. So Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what one should be debited, the other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $200. So same sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account and Ali account. Sales account. Ali account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd payment. October 2nd. So it is always credit. This side is always debit. How much? 300. See, sales is a revenue. Sales is always created. Wait on incomes and gains. Sale is always created. Sale by Ali's account. So we can debit to Ali account. We can debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here we have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in rules. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing you should understand. So very important. Okay, very important. So a lot of students they get confused with personal accounts. Rest of the accounts they do easily. Say nominal accounts expenses they write off as an expense. Income account they write off. Revenue account they also write. Assets account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, they try to think what max is doing. What max is doing, whether max is giving, max is listening, is no, actually, you have to see what Tina, who first position is in Tina. So Tina gives, Ali receives. So this is what, this is very, very important. Okay, now it has been clear to you. So now it is everything is easy. So then the account, the entry is complete. Next. Your sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost 200. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th October 4th. So October 4th, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open one account called purchase returns. This will be always debit. This will be always credit. Always in dollars. Always in dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount? 200, right? 200. We have to credit. This is how you have to do. There are so many ways of remembering things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns with 200 with a debit to Tina 200. This is how you have to read and you have to understand. You have to understand accounts. Very important so that the logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts is clear. Now next. Purchase goods from Lim that cost 2400. So Lim is another person. So again, what is the Lim doing? When we purchase from Lim, obviously Lim gives. When we purchase from Lim gives. So that's why we have to credit Lim. We have to credit Lim. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there. What date? Date is very important. 8th. 8th. Purchase account is debited with Lim. Purchase account is debited with a credit to Lim, and Lim account will be credited. It is Lim account. We have to prepare Lim account. Lim account. We have to create it. So October. 2400. So why are we creating Lim? Because we purchased from him. Understood? This is how it is. This is how you have to understand the concepts. Very clear, very clear. Now it should be crystal clear. Now let us move forward. So then, sold goods to Omer for 1100. Sold goods to Omer. So when we sell, obviously Omer will receive. So Omer is the receiver. Account Omer receives. Omer receives. So Omer receives. So Omer account will be debited. Debit to the account that receives, right? So Omer account will be debited and sales account will be credited. Sales account is already there. So we have to prepare Omer account and we have to write in sales account. So Omer account and sales account. Omer account. Omer account Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Over account is debited. Why? Because we have sold in sales. Sales. Over account is debited with sales 1100. So now over account is debited. Sales account is already there. So a sales account we have to write now. We have to write it in sales. Over account. October 8th. Over account. 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. Purchase returns to Tina 100. So and it is on 10th. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Tina. Purchase returns Tina 100. Why we have debited? Purchase returns. So next. All goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold to him. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali, 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver. He is the giver. Credit is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. One more about sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly reverse of that. It is always a debit. So here the amount will be here and Ali, and it is on 11th, October 11th. And what is the amount? Go to Ali, 300. So you have to write 300. 300. Ali 300. Sales returns 300. So there is no more. So we have written everything. So sales returns account 300. We have to debit. Sales return account will be debited with Ali's account 300. So this is how it is. Okay. So next, this is activity 2.1. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for Penn's business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from Ting that cost 5,000 less trade discount of 15%. So sold goods to leave for 1,000. So return goods costing 500 less discount to Ting. So purchase from V that cost 1,400 from trade discount. Discount of 20%. Paid Ting all money out. Paid V for goods bought on 15 November. Received full payment from V. So what you can do, you can try working on this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day.
Dear students, welcome back to Shasha's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Peng, whatever. So business, post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make the list of ledger accounts that we may have to create. So bought goods from Ting. So purchases account and Ting account. Purchases account, Pinch account, Pinch account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, Tinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he's a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns. So should be less 5% trade discount. So 515 is the 45. So 45, 515 is the 45 means 15% of this. So 4 and then 65. 65 or 55? 55. Correct, no? 5, 15 is a 45. So 55. 55. Okay. So purchase goods from V. So again purchases. Purchase account is already there. So V. So cost 4,800 less trade discount of 20%. So this should be recorded at 4,800 minus 20%. So 4,800 minus 20% is So 48. 3,840. So 3,840. So you have to record it at 3,840. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Ting. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from lay. So that will also be recorded in bank account. So how many accounts should we open? One, one, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 40,250, 4,250, because purchases is an expense. So expense account is always debited 4,250. So date always you write the dollars. Amount you have to always write. Don't forget to write the dollars. And what is the date? November 1. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So So Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next, the entry is complete. So the entry is complete. Purchases account will be debited with Tinge. Tinge account will be credited with purchases. So next, sold goods to Lee for 1,000. Sold goods to Lee. Sales and Lee. Sales account. Lee account. Sales account and leave account. So how much is sales sold goods to leave for 1000 and November 5th. November 5th. November 5th. 1000 credit to sales because sales is an income. So credit all incomes and gains. So 5th. So leave because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting the Lee? Because we have sold him sales. So we have sold him. So debit credit. Sales account will be credited because it's an income. Lee account will be debited because he is a receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discount to tinge. So we are returning the goods worth 500, but after discount it is 455. So return goods means these are purchase returns. Tinge account is already there. Purchase returns, tinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Tinge. We have returned to Tinge. So Tinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 4 and always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited 3840. 3840. So purchase account will be debited 3840. We have purchased from V. Okay. So that's why we have to write V here. So we have purchased from V. So purchases account will be debited. Now we have to write it to V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So November 15th. Treating V because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3840. So now coming back again, next entry. So always write the dates, next entry. Paid tinge all money owed. Paid we for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay we, and we have to receive from Lee. So received. 20th we have paid to tinge and we. 20th we have to pay. We have to pay to tinge and we. So bank account. Bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to pinch and we pinch. How much we have to pay to pinch? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to Tinge. So we have paid 3795 to Tinge. Complete the entry. Complete the entry. How we complete the entry? So we have write in bank account. Bank account. So November 20. So we have paid to Tinge. We have paid 3795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. V, how much we have purchased? We have purchased 3840. So obviously we have to pay him 3840, and it is on November 20th. November 20th we have to pay him. So 3840 we have to pay. So what account will be debited? Bank account will be created. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th. We have received 1000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November 25. So from Lee, right? Lee 1000. 1000 from Lee we have received. Over. That's all. So we have finished. So what else is required? Below are the financial transactions for Penn's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself, then you can compare checking with the answer here, so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account we have paid everything, so there is no amount left over. Sales account is credited. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account we have purchased, we have paid. So bank account we have paid, we have received. So that is the end. So activity 2.1 2 is done. So, dear friends, welcome back to Shasha's virtual classroom. So, this is activity 2.3. So, let us discuss this problem. So, complete the entries for the following table. What you can do, you can just by answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So, complete the entries for the following table. Name of account to debit, name of account to credit. So, sell goods to Dia on credit. So, sale account will be created. Sale account will be created, Dia account will be debited. Why? Because sale is an income, credit or incomes and gains, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods, Dia account will be debited. Buy machinery for use by business on credit from Joints Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in, asset account. So real account, debit what comes in. So machine account, machine is coming in. And who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases, and we have taken Allen is the giver of the goods. Allen, that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recording. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are called purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver. Debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier, so they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods return. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So who will receive? Joint limited will receive. Receive full payment from DER, less cash discount. So we have received payment from DER, receive full payment from DER. So we have received money in bank and we have given discount also. Discount allowed also will come because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DER because she is the giver of money. So pay Allen for goods bought less cash discount. So here we have to pay Allen. Allen is the receiver of money, so Allen account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount, so that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is also this is activity 2.3 David Hopkins, the latest book. So okay. Dear friends, welcome back to Shasha's virtual classroom. This is a practical practice questions from David Hopkins, lesson number 2, credit transactions. So which of the following transactions? So before attempting this, before having a look at these answers, you can try answering yourself, and you can just cross check with the solutions with the discussion. So always get back to me in case you have any doubts by way of comment in the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require a credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or come in. Cash sales, money doesn't go or come in. Payment to a customer. So when we pay, obviously money is paid, is money is credited. So bank account is credited because payment by a customer. Sorry, see, this is payment by a customer. Payment by a customer means we will receive, will not pay. So payment to a supplier. Yes, payment to a supplier is something we paid, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 30. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So it's a purchase. It is a purchase for Joe's. And it is Joe's books means it is purchase. So in Maria's books, it's a sale. But in Joe's books, it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded, okay? So we recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this, not this. These are exam style questions, and this type of questions will come in AS level. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to the ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with the new lesson. So till then, have a good day. Dear friends, welcome back to Shasha's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 trade discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from Prem 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you are sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 320. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. It will be recorded at 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase journal. They record all purchases, individual purchases, and purchase returns journal. Purchase returns journal. They record all purchase returns and cash book. Cash book. So record cash payments, cash payments and discount. So cash book for payments and discount, cash discount. So 3 books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, 3 books of prime entry, and post them to the ledger accounts. So how many ledger accounts are there? So purchase account. Remember, purchase account is different, purchase journal is different. So purchase returns journal, purchase returns account. So then Cora account, frame account, frame account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always advisable for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase returns journal. Okay. So let us first prepare purchase journal. Name of the supplier, because we purchase from supplier. Name of the supplier, invoice number, amount in dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So we have purchased from invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from Prem. Again, purchase goods from Prem. So again, goods from Prem, that is on 2nd November. So 2nd November from Prem. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So at a rate discount of 20%. Again from Cora. What date? It is on 5th November. We have purchased on 5th November from Cora. So how much? What is the amount? 12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to record, prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier. So and so what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from to whom we have returned? Cora. Cora. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again. When you will remember when you are preparing control accounts, when you are reconciling control accounts, at this time, at that time you may need this knowledge. So at that time you may need this knowledge because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book of prime entry, cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash column. So it is in dollars. So this is also in dollars. So here, next, first, what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check, send checks in full settlement of their account to Cora and Frame. So we have paid to Cora and Frame. So we have paid to Cora. but here we need to calculate. So we need to calculate because Quora, what are the transactions you have done with Quora? Quora you have purchased, you have returned, again you have purchased, 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 returned, purchased, purchased, returned. So 8,000 plus 12,800 minus how much you have returned? You have returned 320, worth 320. So this gives 8,000 plus 12,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. So discount 400. But you already pay, you have returned goods worth 320. So what is the discount you'll receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 12,800 and there is a return of 320. So purchase, purchase, return. So net purchase is 20,480 and discount is 5%. So be careful, you have to see sometimes the rate of trade is cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it is the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 19,456. So to frame, how much you have to pay? Frame, so the entire amount you have to pay. So frame is 14,000. Discount is 280. Discount is 280. 14,000. Frame 14,000. Minus 280. 10,000. 13,720. So you have to pay 13,720. So this is the amount you have paid to frame. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November. So you have made the payment of November 9th. So this is the cash. This is how you have to receive record. So discount column 1024, frame 280. So cash and this. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay, so now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do 10th November. So November 10th. So what is the date? What is the amount of purchases, total purchases? We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. I mean purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800. So purchase journal. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you might have to reconcile. So many. It's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but we will enter it in purchases account. We record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns, journal